Welcome back to the Finding Genius video series. I'm very excited to be joined with Nisha Dua, the co-founder of BBG Ventures, a New York-based seed stage and VC fund that invests in women-led consumer tech startups. Nisha, it's great to finally meet you, and thanks for doing this.
Hey, Kunal. Thanks for having me. I'm super excited to be here. I feel like we've been crossing paths at second degrees in the New York ecosystem for a long time.
Yeah, and I just had the pleasure of speaking with two of your recent investments, Millie Clinic and Arise. So congratulations on those. And we can definitely get to it a bit more. But what I was hoping that we can start off with is I feel like you were one of you and Susan, your co-founder of BBG, were some of the pioneers of thinking about investing in underrepresented founders, especially in New York. And you started this in 2014, kind of coming out of AOL. But would love to hear a bit about, 8 years later, you're on Fund 3 now, what the climate was like at that point in time when you were thinking that this would be the thesis and you would go out and start discussing it with LPs. So hear a bit more about the venture ecosystem and what drove you to start that.
Yeah, well, I think we'd both agree that the most exciting venture funds are born out of opportunity and white space. And I think what is both a trial and tribulation and exciting about investing in founders who look different is there is a huge opportunity, but that opportunity can often be veiled by words like diversity and equity. And so your question actually really gets to the heart of the launch of BBG Ventures. And we were born out of AOL. We did our first two proof of concept funds at AOL with the backing of the board and the CEO there. So I will say, asterisks, we were very fortunate to have a solo LP for those first two funds. And our third fund was our first institutional fund in 2019. But if I take a step back, despite having that early funding, we faced, I think, both excitement and challenge along the very lines that you've been asking about and that I just referenced. And so I'll start with our thesis, which is, when you think about the way venture has been funded today, there's a deep mismatch between the founders building companies for consumers today and what those consumers look like, and then at the top end, the people funding those founders. And I don't think that's a secret in venture today. We all know those stats actually off the back of our hands, right? 2% of all venture dollars going to female-only led companies, 13% to mixed teams. When we started in 2014, 94% of check writers were men, the majority of those white men, right? So, you can see how the funnel really works. But our thesis was really, and our thesis has always been around, where is the consumer going? So what are the consumer's preferences, priorities, behaviors, and attitudes, and how are those shifting? And so in 2014, we were coming off the back of generations really of a white male pro forma consumer for whom everything had been built for and the system was funding for. And when you look at sort of who the dominant consumer was, right, 85% of purchasing decisions influenced or driven by women, there was a clear opportunity and white space there. Very few founders building for that consumer set, and certainly very few founders of that ilk being funded. And so to us, it really spoke to an opportunity to drive alpha. And so if I go back to your original question, which was like, what was the response to that? I think in 2014, and we were like one of the first two institutional funds to put a stake in the ground around this mandate. I think the response was, from one part of the ecosystem, wow, this is really exciting. There's no funding for these founders. What a great white space. And from another part, it was, well, are there really enough female founders? Aren't you cutting out half of the population? And I will say we definitely experienced that when we went out to raise our first institutional fund in sort of 2019. I will say it's 2022 and our thesis has evolved, the way we tell the story has evolved, and I think the events of the last even 3 years have dramatically changed the way people think about the world. And so happy to talk about how our thesis evolved and how we think about the consumer has evolved too in relation to that.
Sure. I think that would be great. And I do want to talk about the consumer focus. And perhaps I am too cynical. And I think maybe there's horror stories that you have also of when you raise your first institutional fund of some of the responses that you must have gotten. But could you share a bit more about that, like the thesis that you're mentioning in terms of some of the criticism or feedback is, well, are there enough female founders out there? And are you cutting out too much of the pie by focusing specifically on that? Which we both know that's not true, but people that aren't maybe exposed to the ecosystem or aren't thinking about development, that is critical feedback that a lot of folks get. So would love to learn a bit more about kind of early feedback that you got and how the system's evolved since then, or if it hasn't enough.
Yeah. Well, I think there are two answers to that question. And one is, if you think there aren't enough female founders or you think there aren't enough diverse founders, it simply means you don't have a good network, right? And your network isn't good enough. It really just means you're not meeting them. And so the first question you should be asking yourself is, why is my network so poor? So I'll start with that. But I think if you want to take the chip off your shoulder to answer that question, and I say that tongue in cheek, the better way to think about it as someone who's raising a fund is to say, well, what is the analogy here? So historically, funds with a specialty focus have actually outperformed. And so in one way, is this not too a specialty? And that was actually part of the storyline that I used with early investors, right? Think about this as a specialty like deep tech, right? We have extraordinary focus on this kind of founder. Our networks mean we meet this founder more. We know how to talk to this founder. We know what they're looking for on their cap table, and, right? Like mirror that with another category. And so I think that helped frame it in a different way for folks, right? You can then tell a story about proprietary deal flow, about all those things that contribute to that really great fundraising story as a GP. I think the second thing was, going back to a conversation around opportunity. And so where are the opportunities for these founders? And that, I think, leads me to sort of the next part of what you and I were about to touch on, which is like evolution of thesis. So in 2014, yes, we launched with a mandate to back female founders. Yes, it was about who was the dominant consumer. And so suffice to say, our first fund was very focused on female founders building tech-enabled consumer companies, often for that dominant consumer, right? Zola, the wedding registry company, KiwiCo, the ed tech e-commerce company, Lola, the first, feminine hygiene product company, right? All very much right within the box of what you'd expect. But we've had a couple of evolutions, right? I think on the one hand, we acknowledge no consumer group is a monolith. So even women as a whole cannot be taken as one consumer group. And so we had to expand our thinking to what is the intersectionality of the consumer? What does the makeup of these different consumer groups look like? Who are all these underserved consumers? And so actually today we invest in companies that are led by women, but also diverse founders. So in our most recent portfolio, 100% of companies have a female founder on the team, but 70% have a founder of color on the team. 36% are actually Black or Hispanic. So, thinking about the consumer in a broader way, the underserved consumer in a broader way. I think the second thing was the consumer takes a broad definition for us, actually. So it's not just the buyer of the e-commerce product. It is the buyer, the influencer of the buying decision, but it's also the patient, it's the worker, it's the small business employee, it's the parent. We talk a lot about, in the last few years in venture, consumerization of the enterprise, but consumerization of all these categories.
Right,
actually.
right.
And so for us, it actually, I think, was really helpful as a growing fund to take a broader lens on the consumer, to find those big opportunities and find companies that were actually building to serve millions of Americans via any business model. So actually today we're 50% B2C, but we're 50% B2B or B2B2C. And so we also now have like diversity of business model. And I think that for us is really just a reflection of the changing composition of the world. Like what I would say to you today is we're investing in the polycultural future of America. As we think about the changing makeup of new generations, Gen Z, Gen Alpha is going to be the first majority minority generation in the country. We're on the cusp of a historic generational turnover of power. And those folks are going to demand new systems and products for themselves, and also on behalf of their parents and their grandparents. And so when you think about sort of opportunity at scale and who are the right founders to be building for those overlooked groups and changing systems and disrupting systems, that's going to be founders who look different. So you start to see how this becomes like, this is not about, oh, we just like pick a founder who looks like something and invest in them, right? There's a real opportunity here. And I would say that is what LPs respond to.
Interesting. And when that is interesting because it's all different communities now. So it's not as binary as what we were thinking, but you've gone from fund 1, which is 10 million, fund 2, I believe was 10 million. Now you just raised fund 3, which is 50. Can you talk a bit about, like, as you're mapping the consumerization and you're thinking about the future of the consumer and this world that you're painting for us in terms of how you're investing in it, how did you structure the funds? Because you're no longer an emerging manager. So now there's emerging managers who are learning from you and thinking, okay, there's hundreds of venture funds that are out there now, and we're trying to pick our thesis and develop kind of a proprietary deal flow or build our network to make sure that we're seeing the right deals. How did you think about structure from a sector focus, types of how much you're going to leave for carry on, for follow-on investments, for fund 1, fund 2, and then finally for fund 3, now you rolled out and became your own institutional fund. Would love to hear about how you as a manager of capital have thought about that too.
Yeah, great question. I think on a couple of different levels. So the first is sort of like, where are we in the life cycle of this journey? And I think I used this term earlier, but fund 1 for us was really very proof of concept. And so I think that had a bearing on portfolio construction. And then I think, the second variable that any emerging manager or manager full stop should be thinking about is like, where do I have genuine passion for this business? Do I get excited at an idea on a piece of paper on a napkin stage, or do I get excited when there's a little bit more that I can work with, or actually do I need a lot of data to really have an informed opinion about where this company is going? So I'll start by saying that I think really helped us inform, okay, fund 1 and 2, proof of concept, we have to prove that founders want us on their cap table and that we can get into the best deals led by women. And then the second piece was, okay, seed stage feels really comfortable for us. Like, we like that 0 to 1 stage. I've launched things at AOL. Susan has been from small companies to large companies. She was the first professional CEO of Guild. I launched Built by Girls. So that is we get really excited at that stage. We can play at the further up stage, but that's where we spend the best time ideating with founders. So I think those were really the first 2 metrics that we started with to say, can we earn our right to play in this ecosystem? And from there, really in fund 2, we were already hearing, we want you to write a larger check. We want you to lead the round. And that was because of the value we were providing as former operators. And so we said, okay, now there's a new question, which is there space in the market for another lead fund at
Right.
the seed stage? Even if we think people want us to be doing that. And can we do that in the ecosystem that we're in, right? So think about it, Fund 1, 250K checks, Fund 2, 300 to 500K checks, maybe a little more, starting to dabble around the idea of leading. Well, we're going to need a bigger fund to do that. So we have to spin out of AOL, which had been acquired by Verizon at that point. And, I would say when we were thinking about this, tech had really just come off the back of its own Me Too movement. And so there had been a lot of conversation around supporting female founders, but the capital had not really flowed there. So to us, there was a very clear white space still available for a fund to put a stake in the ground around leading rounds for female and diverse founders, right?
Yeah. Right, which is actually what I wanted to focus on, because now with Fund 3, you are leading and you have these you've made incredible investments in Zola, Modsy, KiwiCo, like you said, and Spring Health. But when you now take these high conviction bets, the name of the podcast is Finding Genius. So how do you identify genius with some of these founders that you're now backing, or trends that you spot earlier to say that this is a high conviction bet that we are going to make on a specific type of founder or a specific type of trend? Can you talk a bit about your process of identifying that?
Yeah. So I think it goes back to this umbrella question of where is the consumer headed, whichever way you think that consumer is. And so I'll take an example for us right now. That macro is the changing composition of the consumer, right? Changing age demographic, changing racial profile, like 1 in 4 Gen Alpha are Hispanic. Even changing like composition of the workforce. The percentage of the workforce, for example, that are deskless workers, not so-called knowledge workers, right? And what is the composition of those workers, right? If you layer on socioeconomic background, racial background, you start to see these overlaps. And so you see where the shifts in the country and American preferences may be ready to be shaken up. And so then underneath that, we look at, well, where are big categories where there's a lot of spend and where are things really broken? So then you start to become a bit more of a generic VC, right? Which is like, well, obviously healthcare, obviously future of work, fintech, maybe climate if you're, if you're risky, right? And not hard done by the clean tech era. And that's when we say, okay, like what is the intersection of those two things? Where are there big broken systems for those overlooked consumers, which by fixing them would not only serve those consumers, but serve Americans at scale. And so, I think of like healthcare then is a really obvious place to start. That's where I've been spending a lot of my time, particularly over the last 2 years. But when you think about, Black and brown populations, women, lower income populations, all of whom are underserved by the American healthcare system, if we can improve things for those populations, many of whom are affected by chronic disease or issues when it comes to paying bills or you can actually start to see how better models in those arenas will serve Americans at large as well.
Right.
And so that's a place we've chosen to go really deep on, for example. And I can talk to you more about some of the specific areas they were excited about. So we've done a deep
please. Yeah, I would love to. I would love to learn more, and I think everybody would, about the other consumer trends that you're excited about, because there are a lot of founders that end up watching this and are looking for inspiration from VCs of the areas that they're spending time. So the consumer trends, and then also the qualities of genius founders. I mean, you've backed the founders of Zola and Spring Health. So even the qualities that have stuck out with you since you are working with them early in the journey.
Yeah. All right. Well, let's stick on the consumer trends, because I think I could go deep into healthcare, but I'll move on to another category. So I think, when we talk about future of work, for example, future of work is such a broad category in VC. And for many VCs, it can mean sort of like, well, what are the tools that we're using at big companies in America to improve HR flows, or, how we're managing a project. But we've actually gone a little deeper into this workforce trend. If I go back to sort of 2017, thinking about what will be the size of the freelance economy, that then evolved into, well, who are these new solopreneurs, right? And everyone has used creator as sort of a catch-all, but you've got freelancers, you have solopreneurs, and wow, okay, there's actually this really big workforce of deskless workers. And so we've sort of tracked that. In 2017, we made an investment into a company called Mighty Networks, which was helping creator-led communities earn money through their communities, right? Monetize their communities, B2B SaaS platform for communities. More recently, we did an investment in a company called Norby, which is like a HubSpot or Salesforce for managing your audience for solopreneurs, right? These small businesses or creator-led businesses. Now we're thinking more broadly about this concept of the worker who's not tied to the desk, the deskless worker. I think 80% of the global workforce are deskless workers. And I talked earlier about, if you think about layering on race and, income, you start to see the overlap with our thesis. It's a really good point for us to hone in, especially because I think only 1 or 2% of venture funding has gone to companies building for deskless workers. And so we made an investment, Susan, my partner, led an investment in a company called Anthill, which is a communications platform for deskless workers at big companies. So I think that is a really underserved arena. And if you think about the last 2 years we've spent during COVID talking about essential workers, well, who are they? They're actually those deskless workers, and they're so important to the economy. So that's a subset of future of work that we're really excited about. I've also been spending a lot of time in climate. I think that many underserved populations are disproportionately affected by climate. The Black community, the Hispanic community, whether that's because of income and where those folks live, but we're actually seeing a lot of founders building in that space. So we're really interested in software plays that relate to decarbonization or tracking of carbon footprint, for example. Excuse me. So those are like 3 of probably like 5 or 6 areas that we're digging into right now. But maybe I'll skip back to the founder question, because it is really the root of all of this work.
Yeah, I mean, I think that would be really interesting, especially like how you qualify a genius in any of those spaces that you just mentioned. Like a healthcare founder, for example, like Anu Sharma from Millie, has a deep personal perspective on why she launched that company, deep healthcare experience. So are there qualities of founders that are operating in healthcare or future of work? Do you see them as one bucket when they come and present to you of certain qualities that they exhibit early on?
Yeah.
Or maybe some of the challenges that some of the founders in Fund 1, now that you've seen them mature and evolve over 8 years, of problems that come repetitive, like repeat themselves with seed stage founders when they're operating.
Yeah. So we use these 2 terms, which I think a number of people do, and not everyone agrees that both of these should be present, by the way. So we look for founders that have both lived experience and learned experience. So I think there's a fair number of VCs who would say lived experience doth not make a great founder, right? Sometimes being an N of 1 can actually work against you. What I would say is like the overwhelming majority of the companies we back and the founders we back are seeking to move the world forward. And so some degree of lived experience is very helpful to the type of company they're building. And I would also say when you think about our thesis, right, like who are the founders that can build for these overlooked millions of Americans, having a lived experience or an identification with the problem they're solving for can be really critical. On its own, it's not enough. So that learned experience, right? Some sort of, whether it's subject matter expertise in the vertical itself or the function that is the core of the product, I think is really critical. So Anu is a great example of that. You mentioned her deep healthcare experience, particularly in terms of working with payers, but her own personal story of being pregnant, ending up with a high-risk pregnancy, turning up at the ER after having diagnosed herself with, post-pregnancy preeclampsia, on the verge of a stroke, right? And a woman of color. So she had seen the intersection of all these challenges that many American women are facing. But it's not enough that it's just in the solo founder. We hope to see that expand across teams. And so
Right.
I think April Coe at Spring Health is another great example of this. So April dealt with her own mental health challenges when she was a college student. She was a product manager at a tech company, so she understood B2B products and how to build them. But her co-founder, Adam, had authored what is now peer-reviewed research on the use of AI and ML in connecting patients with the right mental health provider, right? Like, can you effectively use precision in
Right.
medicine for better outcomes? And so you bring that, in this case, lived and learned experience together and overlapping on some metrics, and what a powerful team. So that's certainly something we're looking for. We're not looking for company logos. In fact, I think very often you'll find that just because a founder has Google on their resume, that doesn't mean they're going to be any good at going
Right.
from 0 to 1,
Yeah.
right? They've got like big budget, big team, and have zero clue on how to build something small. So I'd say that's kind of like the layer. And I think, yeah, sure, there are nuances, right? Like in healthcare, I think there's like a deeper level of subject matter expertise that's required in many arenas of healthcare than there might be, say, in future of work. I think in future of work, you can sometimes get away with more functional experience, right? Like product-led growth expert. So I think what we are overwhelmingly looking for is, is this a founder who can communicate that big vision and not just communicate it, but do they have a perspective on where the world is going and what their company's place is in that? And on the flip side, have they demonstrated in some fashion that they're a high output executor? So they're not just the storyteller, but they can execute on the back end. And I think God, I've probably got a list of like 9 attributes. So I won't go through all of them, but I think, we really look for someone who is quite focused too, ruthlessly focused at the early stage. I think someone who can identify great talent around them, so can be that talent magnet. And, you said that some of the audience for your podcast are like some of these newer founders building, right? And I think sometimes when you're starting a company, you say, well, how do I show that? How do I show traction when I haven't started? Or how do I show that I can execute? Or how do I show that I can get great talent? And I think there are ways to do that, right? So I think of Sarah Pagey at Blueland, who hadn't launched her product when she came in, but she already had like the proprietary formulation for the tablet, for the cleaning product. She already had done focus groups on, the desire from consumers, right? It's like the great example is Katrina Lake at Stitch Fix, who was taking orders in an Excel spreadsheet, I think, when she first started. And then on the talent side, I think of Ariella Safira from Real, another mental health company that we invested in. And I remember when Ariella came in, she hadn't built anything. She just had a deck, but she knew the team members she needed to know to get off the ground and the profile of the person, right? Like I need someone like this, and I'm talking to that person who worked at SoulCycle or worked at the Wing, or the first version of Real was actually a physical location, so that's why those things are important. But then you start to say, okay, well, this person knows what they need to get off the ground, even if they haven't quite done it yet. So there are all these like signaling things, even if you feel like, okay, I don't have any money yet.
This is very helpful. I really appreciate this. I mean, I think you've given us a lot of packed insights in a short period of time. So I apologize for going over, but sharing your thesis, your perspective, some of the areas that you're investing in, I think will drive a lot of value for a lot of folks listening to this. So I appreciate it.
Thanks, Kunal. I had a great time chatting with you. Thanks for diving into the BBG story.
Thanks a lot, Nisha. I appreciate it. Talk soon.